our offtake. The Union Finance Ministry has warned that India's inflation and growth prospects could potentially be at risk due to the rise in oil prices, this caused by the Red Sea crisis. In a monthly economic review, the government has added that the current account deficit will need to be watched closely in FY25. Sapna joins us now with the details of what the government is saying. Sapna, take us through the headlines coming in from the government's review.
Absolutely. First to flag off 2 to 3 aspects that the Finance Ministry has kind of red flagged as a possible fallout of the Red Sea crisis. First, of course, potential impact on India's exports. And, even before that, they're talking about how some of these sectors can be impacted, like, for instance, agriculture commodities, capital goods, textiles, petroleum products, auto ancillary, the entire list is there. So going forward, what they're trying to indicate is that probably, to kind of deal with the situation, kind of a change in the trade routes may be required. The shipping costs, however, may get impacted because of that, because the transit costs will go up. So all of that can, have an inflationary impact. That's one. Secondly, oil has been under some kind of pressure since quite a long time. Probably that is also reflective of the fact that the oil cores were not very gung-ho in terms of the price cut which just happened. It's just 2 rupees across the board, so to speak. So these are some of the big risk factors that we need to keep in mind as we navigate towards FY25. The review also notes that this will have to be seen as to what kind of impact this will have on India's merchandise exports, how the values can be impacted, because so far what has happened is that the trade deficit is also lower despite lower exports, because the commodity prices have been coming down globally. So that has had a salubrious impact as far as India's CAD is concerned. However, going forward, if these kind of export challenges happen, if other sectors are impacted in India, overall food and inflation goes up, then this is going to really turn the tide in a very negative manner. So that's one big thing. The second, of course, they're also talking about the fact that, however, going forward, FY25, the outlook is still bright because domestically India is very strong at the moment. They have also kind of hinted that maybe an 8% growth in FY24 would be possible, because they're saying that Q4, in order to grow at around 8%, Q4, all that you need is around 5.9% growth, which they say is a big understatement. So, all in all, it's a kind of a balancing act, but we need to keep an eye on the Red Sea situation.
All right, Sapna, many thanks for joining us. Now, the aviation regulator has imposed a fine of